Welcome to Different Makes a Difference, where we discuss investment matters that matter to everyday investors. Join Odlum Brown's equity analysts as we examine pertinent topics in today's markets and look at things a little differently. Odlum Brown is an independent Canadian investment firm. We provide integrated wealth management solutions to help clients achieve their financial goals, and we've been doing so for over 100 years. Join us for some lessons we've learned along the way that can make a difference for the future.
Hello, and thank you for joining us. I'm Stephen Boland with Odlum Brown. I'm here today with Cory. Cory has been with Odlum Brown since 2001. As an equity analyst in our research department, he covers telecoms, utilities, energy infrastructure, and renewables. And he's here today to talk about those last two, energy infrastructure and renewables. Welcome, Cory.
Thanks for having me, Steve. It's certainly an interesting time in the world. You never know what each day is going to bring.
That's for sure. One thing I do know is that energy is a big part of the Canadian economy, and it's also a really big part of our daily lives. Yet most of us probably don't give a whole lot of thought to the systems and structures needed to move that energy around. Let's start by explaining, what is energy infrastructure?
Well, in broad terms, it includes everything that helps bring energy to the market. This includes pipelines, oil and gas processing facilities, energy storage, electrical transmission lines, and all other touch points along the way. Infrastructure owners tend to have long-term contracts with those energy producers, take a small fee for providing access to the market.
So why is this an interesting area in which to look for investments?
Well, it's certainly not as exciting as other energy businesses, but we like the earning stability and the potential for dividend growth over time. The businesses operate in near monopolies, essentially the only game in town. So if you want to sell your product, you have to sign a contract and you got to pay for the service. Now, these fees are set at a fixed rate, so the companies don't have to worry about changes in the economy or what's happening with commodity prices. In contrast, an oil and gas producer will make a lot of money when commodity prices go up, but they can lose a lot of money too. Now, if we think back to the pandemic, oil infrastructure businesses held up really, really well. Now, during the lockdown, oil prices collapsed. It actually cost more to ship the oil than it was worth. But the pipeline owners still got paid in full, and their earnings really didn't change very much. Now, they can also grow because they have these networks that they can expand over time and make investments. And that allows them to charge just a little bit more and have more capacity for their customers.
So you mentioned stability and reliability. Is there a risk to that with Donald Trump in the White House? And specifically, I'm thinking tariffs. Now, we know a lot of oil and gas flows across the borders using existing energy infrastructure. How do tariffs impact this flow of energy? And could they potentially harm energy infrastructure investments?
Yeah, it's a good question. So right now, the energy sector is exempt, or oil and gas is exempt. And now, the companies like TC Energy and Enbridge don't pay the tariffs. Those are paid for by their customers, who will ultimately pass that on to the consumer. And at the end of the day, the US needs cheap energy, and Canadian energy is pretty darn cheap. Now, just for some perspective, the US produces about 13 million barrels of oil per day. That's up from about 5 million barrels a day 20 years ago, thanks to fracking and the shale revolution. Canadian oil shipped to the US has grown as well, albeit at a smaller rate, but it's currently around 4 million barrels per day. Now, the most important thing to understand is that Canadian and American energy infrastructure is highly integrated. There's no alternative. If you turn the taps off in Canada, you need to build infrastructure to replace it, which just doesn't make sense to avoid a potential 10% tariff.
So you're saying that a 10% tariff won't change anything. And right now there is an exemption for oil and gas. But what if that exemption goes away and tariffs actually go even higher? At what point does it become too expensive for the US to buy Canadian oil? And Trump has said that America doesn't need Canadian oil. Is that true? And could the US eventually produce enough of its own oil and gas that they don't need Canada?
Well, as I mentioned, the higher tariffs will probably lead to higher prices as it gets passed on to consumers. Now, this might encourage U.S. domestic production to increase, But soaring energy prices would be extremely unpopular with voters, and it would stoke inflation all over the economy. And nobody wants that. Another key consideration is that energy infrastructure is tailored to the supply that it is built for. So now, as an example, Canadian oil is predominantly heavy, which is well suited to refineries in the Gulf Coast. U.S. shale production is primarily light oil, which can't be processed at those same refineries. The replacement for Canadian oil imports, because of those factors, would likely not be American. It would actually be Venezuelan or from Iraq. So we think there's a kind of an unofficial recognition from the Trump administration that access to affordable Canadian oil and gas actually benefits the U.S. economy. From day one, the tariff was set at a lower rate, but certainly trade wars can escalate, and that would be bad for both countries.
Interesting. So that's primarily the U.S. perspective. Let's think about it from a Canadian viewpoint. I know I try to think of challenges as opportunities to grow. What are the opportunities here for Canada?
Well, the silver linings of a trade war is that Canadians and our government are motivated to reduce our dependence on the U.S. and add new trading partners while finding made-in-Canada solutions. An opportunity is exporting liquefied natural gas, or LNG, to markets around the world. LNG Canada actually just completed a large-scale facility in Kitimat that will move about 2 BCF a day of natural gas. Now, that could expand to 5 BCF a day, and that's a lot. The project connects to an abundant supply of natural gas in BC and Alberta and will move the gas to Asian markets. We could certainly see more of these types of facilities built off the West Coast. However, building the pipeline to connect to the Kitimat LNG facility required 10 years of permitting and another 3 years to construct it. Now, we're optimistic that this process can be improved. Streamlining the permitting process would be an important first step. Energy infrastructure businesses want to expand their networks. They want to make investments, but the process is often drawn out and can be challenging, such that the projects are no longer economically viable. The sector has learned to reduce its environmental footprint by using existing right-of-ways, and companies are also more proactive, engaging with landowners and Indigenous groups. This means smaller projects within their current networks have the best chance of completion. Now, we think this trend likely continues.
There's been a lot of talk of building a cross-Canada pipeline, and that's something that's come up in the past as well. Is that just a pipe dream, or could that become a reality?
Well, the short answer is probably not. The cost would just be astronomical at $30 to $40 billion. And that assumes everything goes well. There's unilateral support from all the provinces. It's a really interesting idea because it would be all Canadian and would open up access to international markets off the East Coast. But the political risk and the cost is probably just too high. So we think natural gas projects offer a more compelling investment opportunity for Canadians.
So all this sounds great, but I'm wondering, does it all come at a cost to the environment?
Yeah, that's a really good question. We are very supportive of the clean energy transition. We think renewable energy offers some wonderful investment opportunities as well. In our view, natural gas is going to play a big role to help bridge the energy gap and support the rollout of clean energy. Global energy demand is expected to grow by about 2% every year, and that could accelerate if AI advancements continue on the pace that they're at. Natural gas has already been replacing coal in North American electric grids as well. So gas power generation, it's the most flexible and it's readily available, and it pairs perfectly with intermittent renewables. Another option is nuclear. That will take time, could be a decade, but we think that's an interesting opportunity as well.
So that's a really great overview. Let's drill down a little bit. What are some stocks that you like in this sector?
Yeah. Well, there's various options. We own TC Energy as a leading transporter of natural gas. The company is well positioned to participate in the growth of gas power generation, and earnings tend to be very stable, which is really appealing right now. It also pays a nice dividend. In the renewable energy sector, our favorite idea is Brookfield Renewable. They're a global clean energy powerhouse. They have some of the best assets in the sector, which include highly valuable and I think underappreciated hydroelectric facilities. The company is also very well run and has a great track record of growing earnings and dividends.
Well, that sounds like a really good place to end. I think what you're saying is that energy infrastructure is critical to our lives, and it's a really important part of the North American economy. It's also an area that presents opportunities for investors. Tariffs are certainly on a lot of people's minds right now, but the risk to energy infrastructure companies looks manageable. And it has sparked Canadians and companies to seek new opportunities. It all adds up to what should be a pretty good future for certain energy infrastructure companies and some renewable energy companies as well. So thanks so much for being here today, Cory. Thanks everyone for listening. We really appreciate it. And please consider subscribing to our podcast. Have a great day, and we look forward to connecting again soon.
Thank you for listening to another episode of Different Makes a Difference. Just as every individual is unique, so are your financial circumstances. Be sure to talk to your professional advisors for advice related specifically to you. Our podcast is for general information purposes for Canadians only. The views expressed are those of the presenters and may not reflect the opinions of Odlum Brown. Be sure to check out our full disclaimer and subscribe to the podcast at odlumbrown.com/differentmakesadifference. Odlum Brown is a member of the Canadian Investor Protection Fund.